Hey everyone, welcome back to the channel, your one-stop source for stock breakdowns, market insight, and global investing ideas. Today we're diving into one of India's tech giants, Infosys Limited, NYSE, INFY. As of October 16, 2025, Infosys closed at $16.07, down about 2.25% for the day. But the real question is this: does that dip represent opportunity, or is the stock just fairly priced for what it delivers? Let's break it down. Fundamentals, growth story, dividend yield, and how it stacks up against global tech peers. Let's start with the basics. Infosys is one of the world's largest IT services firms, providing consulting, digital transformation, cloud, AI, and automation services across North America, Europe, and Asia. With 323,000 employees and nearly $20 billion in annual revenue, it's a global force in enterprise technology. In fiscal 2024, Infosys reported $19.28 billion in revenue, up nearly 4% year-over-year, and $3.16 billion in net income. Margins remain strong, but growth has slowed, a reflection of macroeconomic uncertainty and softer demand in North America, its key market. Still, Infosys isn't standing still. The company's been aggressively expanding partnerships in AI, cloud, and digital services, including collaborations with Salesforce, MasterCard, and the UK's National Health Service. These are not vanity partnerships. They're strategic, multi-year deals worth billions, the kind of sticky revenue streams that keep Infosys relevant even when global IT budgets tighten. Now, let's look at the stock performance. Infosys has a market cap of about $69 billion, a P/E ratio of 21, and a forward P around 20. Not cheap, but not outrageous for a consistent cash generator. The dividend yield currently sits around 2.7%, with annual payouts of about 43 cents per share. Infosys has also shown shareholder friendliness through buybacks. Most recently, a $2 billion repurchase program announced this fall. And unlike many tech companies that reinvest every dime, Infosys combines solid capital returns with continued investment in innovation. The stock's 52-week range tells the story of the year: a high near $23.63 and a low of $15.82, which is exactly where it's hovering now. That means it's sitting right at support levels, with potential 5 to 6% upside based on analyst price targets around $17. Let's talk earnings and guidance. Infosys recently reported Q2 FY 2026 earnings, posting revenue growth of 2.2% sequentially and crossing the $5 billion quarterly mark for the first time. Free cash flow came in strong at $1.1 billion, and total contract value for large deals hit $3.1 billion. A sign that corporate clients are still spending, even if cautiously. The company also raised the lower end of its full-year revenue guidance to 2% to 3% growth, showing confidence despite global headwinds. CEO Salil Parekh highlighted ongoing demand in AI-powered automation, sustainability consulting, and digital modernization. The company's new AI platform, Infosys Topaz, is expected to become a key growth lever over the next 12 to 18 months. In short, Infosys is adapting to the new era of AI-driven IT, not by hype, but through execution. Now, how do analysts view it? Out of 6 analysts currently covering INFY, the consensus rating is hold. The general sentiment is that Infosys remains a quality name, but the valuation already reflects much of that quality. In other words, it's not undervalued, it's just fairly priced. The biggest debate is growth. While Infosys is innovating, the company's US and European markets are still feeling the pinch from slower IT spending and delayed digital transformation budgets. Analysts expect single-digit growth through 2026, with margin stability but limited earnings acceleration. So, the bull case isn't about explosive upside. It's about durable income and steady compounding. Let's talk dividends and shareholder value. Infosys stands out among global tech firms for returning cash to shareholders, something U.S. peers like Accenture and IBM also do well. Its dividend payout ratio remains conservative, leaving room for reinvestment, while buybacks have added consistent EPS support. If you're an income investor, the 2.7% yield may not seem thrilling, but combined with buybacks and organic growth, total shareholder return has been impressive over the past decade. Over a 5-year horizon, Infosys has outperformed the S&P 500's volatility profile with a beta of just 0.34, meaning less drama, fewer heart attacks, and a much smoother ride. Let's zoom out. What makes Infosys interesting now? 3 big things. Resilience. Infosys is weathering a global IT slowdown better than most peers. AI and automation. The company is deeply embedded in next-gen enterprise tech, not hype-driven, but integration-driven. Valuation. At $16, it's not a screaming bargain, but it's near the lower end of its trading range with limited downside and moderate upside. If you're looking for a steady compounder, not a speculative rocket, INFY fits the bill. Of course, there are risks. Infosys still relies heavily on overseas clients, meaning currency fluctuations, U.S. policy changes, and tech spending cycles can all hit margins. Competition remains fierce from Tata Consultancy Services, Wipro, Accenture, and emerging AI consultancies. And as the macro environment remains uncertain, IT budgets could shrink again before they expand. So don't expect fireworks. Expect quiet consistency. So what's the bottom line? Infosys is what you'd call a hold-plus stock. Worth keeping, worth adding on dips, but not cheap enough for aggressive new buys. It's a textbook case of great business, fair price. If you're hunting for stable income, exposure to global tech transformation, and an anchor position in the India growth story, Infosys deserves a spot on your watch list. Long-term, the company's pivot toward AI-driven digital services, sustainability, and automation will likely keep it at the forefront of global IT for years to come. That's it for today's deep dive on Infosys, NYSE, INFY. If you found this breakdown useful, hit that like button, subscribe for more stock insights, and let me know in the comments. Are you buying Infosys, holding, or waiting for a better price? Until next time, keep investing smart and stay steady in the storm.